Hey everybody, Faiz, Versey'S, a real estate broker with the LePage team Realty, and welcome. Today is a very special seminar where I give my annual prediction as to what's going to happen in 2024. I've been doing this for some years, as we will go through. My friends, the slide in front of you is a wonderful slide. This is from a package that we were recently given a presentation by our big boss, the big boss that sits in Toronto. And it's a very interesting slide. It says that LePage participates, if you can see my cursor here, participates in 1/3 of all transactional dollar volume in Canada. I just wanted to point this out because this is amazing. 1/3 of all transactional dollar volume in Canada. I don't know exactly what that means, but it means something important. And it looks like the number here that's associated with that is 123 billion. That sounds like a lot. My friends, the reason I bring this up is I work for LePage team Realty, which is part of LePage Canada. And that should give you a lot of confidence. When you're working with somebody who works for LePage in Canada, then you've got the odds in your favor. Look, real estate, nothing is guaranteed. Just got to put the odds in your favor. So if you're working with a great company like LePage Canada, you're working with a great broker like myself, Faiz Versey'S, then you put the odds in your favor. Hopefully you accomplish the result that you're looking for. If you're looking to buy, hopefully you buy the right home at the right price. And if you're looking to sell, hopefully you can maximize the benefit from that sale. Put as much pocket in your pocket, put as much money in your pocket, and maximize your equity. That is always my goal. So my friends, we're going to carry on with this seminar, and I do want to get through it quickly because I've got some wonderful lunch waiting for me. I don't know if you can see this in the camera. My wife packed me. Shouldn't drop that. So wonderful lunch. That's chicken curry, and then there is some naan. I think there's naan here. Let's find out. Let's open this and see what's in this. There's one package and another package, and yes, there is naan. Like I thought, with chicken curry, that goes just amazing. And I got one more ingredient, so I'm sitting in the office now, but I'll be taking all of this to the kitchen and having it there. And there's one very important ingredient, my favorite with all my foods, is chilies. Okay, friends, if you can see it. So I come from a Pakistani origin, and Pakistanis, we love hot, spicy food. So I'm looking forward to that lunch. Let's get through this. I hope you'll enjoy it. I hope you'll get some important and interesting information. So let's carry on. Everybody, welcome back. And so this is the topic for today. I'm going to have to read it because it's such a long topic. Faiz Versey'S daring predictions for 2024 Ottawa Real Estate Market Outlook for 2024. Yikes. Don't know what I was thinking when I made up that title, but it's been around for the last 4 to 5 years, so I can't change it right now. Wouldn't want to. So this is it. Basically, I have been doing this for the last 1, 2, 3, 4 years and predicting what's going to come down the pike in the rest of the year. So my friends, that's a very difficult job, by the way. Those of you who are in the forecasting field, you know exactly what I'm talking about. It's no joke. It's not easy. But I do want to also add that, look, this is just short-term outlook. Real estate is a long-term asset. I've always said this. Please take this for fun. This is just for entertainment. If you're holding a property, residential, commercial, land, whatever, you want to hold it for the long term. 5 years, 10 years, 15, 20, 25, 100 years. Okay, so this is just for fun. People keep asking me, Faiz, what's your outlook for this year? So, well, I'll tell you, but it's just for fun. So let's take a look at this chart. I started doing this in 2020, and you'll see my track record now. It's actually, let's take a look at it. It was good until something happened. We'll figure this out. We'll figure that out. So in 2020, I predicted a return of 8.9%, and this is all a record. You can go and check the YouTube videos that talk about this. So 8 to 9% in 2020, and LePage, my bosses, predicted 4.5%. So I love to compare myself with my bosses because if I can beat them, that's the year I'm going to go and say, hey guys, guess what? I beat you. So there's nothing more fun, no bigger pleasure in life than beating your boss at something. So I like to compare with my bosses. Let's see how I did against my bosses and against the actual as well. So the LePage prediction was 4.5% for 2020, and the actual at the end of the year came out to 19.5%. We were both quite a ways off. I was closer. I won that round. 2021, I predicted again 8 to 9%. My bosses predicted 11.5%. It came out to 21.9%. My bosses beat me in that year. 2022, I predicted 7.5%. They predicted 9%. And then just when I was doing this seminar, I realized that I had picked 0.8 in my video for that year, but I don't know where I got that number from, or maybe there were some revisions, because I just checked the latest information that I have, and the return that year was 7.1%. 7.1%. Amazing. So whatever happened is moot point, but let's look at the 7.1%. That is so close to 7.5. My God, that's almost the same number. Folks, I'm really good at this stuff. And my bosses were 9, so I beat them again in that year. I'm really good at this stuff, but we're about to put a little bit of a a puncture in my balloon in the next entry here. In 2023, I predicted 1%. My bosses predicted 2%. Let's see what the actual came out to. I'm just going to go to a chart and check it out. So in this chart, which is a fantastic chart, we're going to come back to it and discuss a few more things. It's called the Ottawa Residential Average Sales Chart from 1956 to 2023, the last 67 years of history of the Ottawa residential market, the price movements, and it's amazing. A lot of interesting information in there. We'll come back to it a little bit later. Let's just look at what happened in 2023. We had a minus 5.3% return. Let's go back to my other chart. See you in a moment. So here we go. What happened in 2023? Let's put the results there. It was minus 5.30. Yikes. So I really messed up there. I had predicted a +1 positive trend and it came out to minus. I feel terrible. I feel that that's so bad. I can't really show my face to the world anymore. So I'm going to have to wear this now for the rest of my life. Okay, so I'm going to be Mr. Thumbs Down for the rest of my life. What can I do? That's it. That's the penalty for doing these predictions. My friends, the only redeeming feature is that my bosses predicted +2 for 2023. So I beat them. I was closer to the ultimate result. Isn't that fantastic? That's amazing. Faiz, Versey'S, the last 4 years. Faiz, Versey'S, 3, bosses 1. Yay! Let's carry on with some more analysis to see what we are going to do in 2024. Let me tell you that my bosses have predicted 4.5%. What does Faiz Versey'S predict? Because that's the topic. Faiz Versey'S daring predictions. What does Faiz Versey'S predict? Let's look at some analysis and data and then we'll come back to that. My friends, as I go forward, let me just remove this for the balance of this video and maybe I won't wear it again. We'll see. Okay. So I've got some very interesting slides. Let me see what of these I can share with you. Okay, our extensive. Okay, this is fine. This is all fine. Blah, blah, blah. It's telling everybody what a wonderful company we are. That's amazing. Let me go to the slide. Oh, here it is. Your country. Great slide and some great information here. Let's take a look at what we can learn from these slides. Okay, so the real estate industry is extremely important to Canada's economic health. Nice. GDP from real estate brokerage industry was down 6.8% during October lows. That was last year, dragging down Canada's overall economy. So we can see a little bit of a red line like this. This was last year. Remember last year I made a prediction in November when I did my market update that I think we're done with the downturn, but there you go. That was the downturn. This is interesting graph, too complicated. Let's carry on. This is interesting. This is interesting, but too complicated for me to deal with right now. And let's go to something that looks a lot easier to understand. And maybe this one. This one looks interesting. So the Bank of Canada has held its benchmark interest rate at 5% since July of last year of 2023. So you can see this is the graph. Very, very nice graph. I love it. And it basically shows the path of the interest rates. So that's it. That's all we're going to talk about over there. We are currently at 5% and the bank is holding it steady there. Let's carry on. Okay, this is interesting. So here, there's some forecasting from LePage Canada. It says the Bank of Canada expected to ease off. Okay, so expected to ease off. So I'm a bit skeptical, or should I say a bit cautious about making these type of short-term predictions. My bosses have done it fantastic. Good luck to them. I'm sure there's something in here that says this is a forecast and if it doesn't come right, don't blame us. But here's the amazing thing. They're forecasting that the interest rate is going to decline this year. I hope not, but I think that's going to happen. Back in January of 2023, get this, back in January of 2023, when I did my market forecast for 2023, I said that the interest rates will probably start declining again in 2024, in the second half of 2024. So I said this about a year earlier than LePage Canada. Again, I'd love to beat my bosses if possible. But the point is that we don't really know. The interest rate is in the hands of the Bank of Canada, so I don't really make these very short-term predictions. It's all just for fun. So the thing is, understand at all times through this video that property is a long-term hold. Interest rates, they come and go. So what we say in real estate is date the rate, marry the house. Don't worry about the interest rates. They'll go up and down. You just hold the house for the long term, 7 years, 10 years, 15, 20. You'll do fine. So LePage Canada is forecasting that the interest rates are going to fall during 2024, somewhere from 5% down to, it looks like 4% on this chart. If it happens, good. And if it doesn't, it doesn't. We'll see what happens. If it happens, it's good because property then becomes more affordable, if you can understand that. If I can afford a mortgage today of $2,000, interest rates are at 5%. This Bank of Canada rate. The actual interest rate per the mortgage companies will be different, maybe 5.5%. And then if the Bank of Canada lowers interest rates, well, then the banks will also lower their mortgage rate, let's say down to 4.5%. I'm just making this up. But that means my $2,000 mortgage, which could have bought me a house for $500,000, now my $2,000 payment can probably buy me a house for $550,000. So therefore the prices go up. So this is a good news. If it happens, we will wait and see. Let's carry on to the next slide. Your industry, okay. Interesting slide here. Canada's population continues to grow. We're at 40 million plus now. It's going to slow a little bit because they're pulling back on immigration. They think we have enough people. What else can I tell you? Okay, this is an interesting graph, I think. No, that's too complicated. This one is interesting. So this one says Canada has stronger working age. Let me just blow this up a little bit. Canada has stronger working age population growth than its counterparts. Very interesting. Look at this graph here. And it says Canada is the red line here. So our working age population keeps on growing more than the other countries like United States, Euro area, and United Kingdom. So what that means is if we have more people working, producing income, they can buy properties. Chances are that the property prices will rise from here. There's a bit more to that story, a bit less. Should I continue? Should I say anything? Because time is carrying on. There is more to that story because there is a chance that if the government removes its foreign buyer ban, that could impact the prices of homes. I don't know if that's going to happen. It may or may never materialize. So let's again not speculate and let's not worry about it. We'll carry on to the next slide. Let's see what that's all about. Let's see. This is a very interesting slide. So I want to expand it again. Okay, so is this the interesting slide? I think it is not the interesting. It's very complicated. Let's go on to the next one. And let's see if I can move this machine in the right direction. I've somehow not managed to do that yet. Okay, let me just pause this for a second and see how I get through the next slide. Public, here we are again. I got that to work. Let's go to the next slide. Blah, 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 blah. Okay, this is a very interesting slide. So this talks about the mortgage delinquency rate in Canada, which is holding steady at a historically low rate despite higher debt servicing costs. My friends, please freeze this. Read this carefully, what I just said. I get a lot of comments from people along the lines of, because interest rates have gone up so dramatically last year, therefore the foreclosures are going to start, and therefore I'm waiting for prices to fall. My friends, I don't know where you get that information from. Maybe it's correct, maybe it's not, I don't know. But basically, unless you're a financial analyst and you know what you're talking about, the analysis that I see, the financial people that we are talking to, and this lovely chart over here tells us that in Canada, the chance of delinquency and foreclosures happening is very remote. Look at it. The number right now is something like 0.15% of households of mortgages are going in default. 0.15% is like nothing. Okay, so what that's saying is in Canada, we have managed the mortgage delinquency scenario very, very well. The government had artificially raised the interest rates by something called a stress test because they maybe anticipated what was going to come. And so a lot of people can handle their mortgages even if the interest rates have gone up. Yes, a few people can't. That's going to happen. And so they may need to sell. But is that going to affect prices? I don't think so. The prices have now, they did for last year, but I think now the prices have bottomed and we're heading straight back up again. So we'll talk more about that. Another thing is for foreclosures is that if many people don't know this, but a foreclosure is not a great deal. If it happens and it does come up on MLS time to time, a foreclosure is not a great deal because the bank that is doing that foreclosure has to follow certain rules. They have to take I don't know this all in detail because I'm a real estate broker, not a mortgage broker, not a banker, but basically they have to take a number of appraisals. They have to put it on MLS. Once it's on MLS, it's in the view of the market. So it's going to sell at the market price. There's no extra value. There's no good deal to be had in a foreclosure, according to me. Okay, so I hope you understand that. Let's carry on to the next slide. Let's see if there's anything interesting there. Blah, blah, blah. Okay, that's fine. Okay, this is a very interesting slide. So freeze this one. This is Royal LePage Canada's forecast for price movements in 2024 across Canada. So you can go ahead and take a look. Here is Ottawa at 4.5%. So that's the number I've used on the previous projection that I'm working on. Let's see what comes next. Very interesting. Canada's low vacancy rate reflects tighter and tighter rental supply changes. We have a housing shortage. So look at this. The rental supply is just falling off a cliff over here. Housing vacancy rate. Housing vacancy is just falling off a cliff. We have a housing shortage in Canada. It's good news for developers. If you're a developer, go and build some houses. If you're a buyer, don't wait for the prices to come down. They're not coming down. If you're a seller, You're selling for whatever reason. You probably made a good profit if you held the house for a few years, except for the pandemic years. So these are all the things to think about. If you have any questions about that, feel free to give me a call. I'll fill you in more detail. I can't get into too much detail here because I think the seminar is going on quite long, but let's carry on. Amazing. Canada's increase in demographic demand coupled with existing supply issues help explain why housing prices have not fallen significantly and why rent inflation continues to climb. My friends, this chart says a lot. Here we go. Housing starts is this line. Housing starts, new housing coming online into the market, and demographic trend is our population keeps on increasing. Wow, look at this gap. Wow. What do you think it means? I'll leave it to you to figure it out. Okay, so let's carry on. Okay, I think that's the end of this PowerPoint slide. Nothing more interesting that I want to add from here. Let's go back to this chart. This is an amazing chart. Let's see what it tells us. So last year was minus 5.3. I want to point out a few things here, my friends, which will help me to predict what's coming down in 2024. So the first thing to understand about this chart, by the way, this chart is beautiful. If anybody needs a copy, just send me an email with your name and I will send you a copy of this chart. What this chart is saying is that a house back in 1956, which was 13,351, today is 654,000. Isn't that amazing? You just had to own this house for a long time and it went up tremendously in value. So that's how housing works in Ottawa. And I'm only speaking Ottawa. I only understand the Ottawa market. I don't know any other market anywhere in Canada. But if you need information, give me a call. I'll see what I can do. The other interesting thing to understand here is the number of negatives. Look at this. The number of negatives happened there twice. And then over here 3 times. That's 5 now in total. And now the 6th one. In 67 years, we've had 6 declines. At 6 negative movements in the price year on year. That's like 10% of the time, and 90% it goes up. What it's telling you is that real estate has a good long-term trend to build your wealth, and it's a very reliable asset in terms of holding for the long term in Ottawa. And if you have odds of, if you bought the property today and it's going to be higher, and the odds are 90% that it's going to be higher next year, wow, those are amazing odds. I would take them any day. In real estate, we say, and this is still a long-term hold because you can get these periods of negatives. But in real estate, we say you don't wait to buy property, you buy and then you wait for this reason right in front of you. The other very interesting conclusion that I want to take away from this graph, which will help me to predict what's coming, is the fact that, let's look, if we add these 2 negatives, that's about -5. If we add these 3 negatives, that's about -5. And if we come to this one, it's -5. So what this chart is telling me is that every 30 years we have a negative trend. Ta-da! I'm going to blow your mind now. Every 30 years we have a negative trend, and that negative trend is approximately 5%. Amazing, amazing, amazing. I'm just such a genius. I'm just kidding, my friends. This is just me having fun. Nobody knows the future. But in my view, if we've already had the -5 that we keep getting every 30 years, we are done with the negative trend. Let's go back to my other chart and I'm ready to make my prediction. All right, public. So what does Versey'S say for 2024? Well, here's the tough part. My bosses have predicted 4.5%, which unfortunately I think is exactly the right number. So I can't use that number because they predicted it. So I'll have to do something different. I can't predict 3.5 because I don't think it'll be 3.5. And I'm going to be forced to predict 5.5 because I want to be at least 1% away from them. I have to give them a chance to beat me. I mean, after all, they are 3-1 down. So here's my prediction. I'm going to go with 5.5. Stick myself out on a limb and say the price appreciation in residential property market for 2024 will be 5.5%. Let's see what happens at the end of the year. I will give you the update. My friends, I hope you enjoyed that. I hope you found it useful. If you did, please share this video. Please like this video. When you do things like that, the algorithm, wherever you're watching this, likes that kind of activity and will send it out to more people who hopefully need to know about Ottawa. And hopefully there are people out there who would like to know about what's happening and what does the guru of forecasting have to say. So there you go. The guru, the guy who's going to be wearing this or maybe not wearing it. This little dunce mask here, and so people want to hear, do send it out by doing the like and the sharing and so on. My friends, if you have questions, please feel free to call me. And look, I'm in the business of helping people to buy and sell property. If I can help you in that area, or if you have a friend who needs help, feel free to reach out to me. I would be delighted to help. My friends, until I speak with you again, take care. Bye-bye.